Good evening, all. It's Sunday night. This is Shea Horowitz, ShogunTrading.com. This is our free weekly newsletter. I've been positive about the market for quite a while. I've been pretty bullish about it, and the market is actually getting ready for a nice run. Let me show you something. This is S&P 500 daily basis. You can see the double bottom. I've been talking about this for quite a while. Excuse my artistic talent. Right now we are against resistance. It was 1388 before. Now it's 1400, and we're right there. And as soon as we break it, the market is going to go into a long-term uptrend, which is something I'm very excited about because it's good for all of us. You can see a lot of these double bottoms, and every time there's a double bottom, you can see that the market goes on and on and on and on. So I want to encourage you to really pay attention to the market at this point because it could go for a very long time to the upside. Don't listen to all the news on the news channels. The doomsayers. Bad news sells a lot better than good news. The market is looking 6 months ahead. The market always trades 6 months ahead. That's why it's called investing and not reaction. 6 months ahead, 9 months ahead, what do you think is going to happen? Tax rebates, I don't know about you, but I'm really excited about the $600 that I'm going to get. I'm going to spend it like there's no tomorrow. Besides that, we have interest rates that are going down. By the way, FOMC meeting this week. They're expecting another quarter of a point cut. It's probably going to be the final cut. Remember that everyone is sitting on the sidelines right now waiting for that final cut. If you're going to refinance a home or if you're going to buy a home, would you refinance or buy a home if you knew that you could get another quarter of a percent lower when they're done? So everybody's sitting on the sidelines right now. I think the whole real estate market is sitting on the sidelines right now. Everybody's just waiting for the bottom. As soon as they get to the bottom, they're going to bounce on. They're going to pounce on it. And I think the same thing basically happens with the stock market itself. As soon as we get to a certain bottom, and they basically declare the bottom, okay, we're done lowering rates. The market, economy looks fine at this point. Everybody's going to pounce on it, and I think that's what's going to happen. So we have a lot of money and a lot of people waiting to buy a house, waiting to buy stocks, and they're just looking for the signal. The quarter of a point drop is going to be not as significant as the language they're going to use. If Bernanke comes out and he says, I'm done lowering rates, we're going to see how things are going to go, then the market is going to look at it positively. So anyway, that's S&P 500. If you look at the Dow Jones Industrial Average, they're basically the same thing as well. Also broke resistance and drifting up at this point. And as long as we maintain the subtrend, we're fine. NDX, the Nasdaq 100, is already in an uptrend. This is what I've been talking about for quite a while. It is very choppy. You can see lots of noise, lots of up, down, up, down, up, down, up, down, up, down. So not very good trend to hold on to. And I think the reason why is because S&P 500, which I think is a lot more substantial, a lot more important, has not broken the resistance level quite yet. But as soon as we do, we're gonna take off. The market is looking for decision. The market is looking for certainty, and I think this FOMC meeting might give us that kind of certainty. So be ready for that. To expand a little bit on this, I want to show you some ETFs. This is the iShares S&P 500 index. This is one that you can invest in if you want to take advantage of this market rise, 140.25. Another one, iShares Russell 1000. Again, resistance level. You can see that. Let me use my screen draw. That was horrible drawing. I'm sorry. Much straighter. And you can see we're going up over here, and we're just looking to break this resistance. These are all major indexes. Okay, this is something I wanted to show you. This is the real estate. And look at the kind of trend we're getting on real estate right now. This is a ultra real estate ETF. And look how we're about to penetrate the 200-day moving average, the red line, and start a nice uptrend. Keep going. This is the financials. Financials are very important right now. Financials really got beat up because of the subprime and so on. See how higher bottoms. This is the first time we've had higher bottoms in a very long time. And right now, if we penetrate the 35, we might start an uptrend. This is something that's pretty exciting. It's pretty good for us. XLF is another financial. It's an S&P, and you can see that it's also doing this. Notice that I've talked about this channel before. Remember this channel? And we broke out of it. We're actually breaking out of it. If we break this, it's going to be a change of trend to the upside. This is very exciting. This is something that's different. Of course, the spiders. You can see the same pattern on the spiders. How about the diamonds? This is important. Long-term investing in the ETFs. You can buy the whole market at one time. This is Ultra S&P 500. Very nice mover if you want to get into it. If it only goes up to from 75 to 85, you made pretty good money on it. That's the whole S&P 500. UWM, Russell again, much wider type of ETF, and also you can see that it's ready to go, and it's got quite a bit of upside potential. This is the time that you don't want to be in cash. This is the time that you want to look for that. You want to look for ETFs if you want to invest or if you want to trade. Of course, from a trading standpoint, we're doing really well right now. This is earnings season. The earnings season is great because there's so much volatility, so many stocks are flying, and we love that. The market is not in a trend, but individual stocks can do pretty well. Let me show you some examples. TSN 1734 was our call, and within 3 days it went up to 1951. That's 2 points on a $17 stock. So for us, that's great. I mean, we love that. I mean, I want to do that every day. I want to do 5% every day. I think that's great. We also had a Chinese stock, EJ, and let me blow it up a little bit. You can see 1454 up to 16 in 2 days. That's 10%, 10% in 2 days. Do that every day, and you're doing very well. Another one, LPX. LPX, we just had that Friday, 1126 all the way up to 1216. That's almost a point on an $11 stock. Pretty substantial and worked pretty well for us. There were a few others that I haven't thought about, but we had quite a few of them last week that worked very well for us, and I love that. Whenever I see volatility, whenever I see momentum, that's where we thrive. That's what we do extremely well. When the market is quiet, we don't do very well, honestly. But I'm excited about the fact that the market is going to break resistance and start moving. I'm excited about Bernanke almost done lowering rates and releasing the market and letting the market start flying. And to me, it's a pretty exciting time. So again, I encourage you to take cash out of your checking accounts and put it into a brokerage account. And once you're in a brokerage account, I encourage you to look for these ETFs. If you're very conservative, if you want to buy across the market, look for those ETFs. Look to spread your risk over many stocks and be conservative about it. Or if you want to trade, I encourage you to do the swing trading like we are doing, and so you can capture more profits much quicker. But of course, you have to be a lot more active. But of course, the profits are much higher. Anyway, that's all I have for you for this week. Watch out for FOMC meeting. I'm predicting results, but I don't know the results, and that's not always a good thing. So I'm going to be pretty cautious, but we'll see what happens. And more earnings coming out, more reports are coming out. And that's about it. Have a great week, and I'll talk to you next weekend. Take care.